In this episode, Ryan Griggs and I take a deeper look at the infinite banking concept.
So we're continuing a conversation about the infinite banking concept, kind of where episode 1 we covered where I've come from, where you've come from prior to getting into the infinite banking concept and becoming an agent, having the practices that we have now. But towards the end of that episode, we started to get into the infinite banking concept, and a question that I think a lot of people who are just first hearing about the concept, who have just been told about Nelson's book or have just heard about it, one big question in their mind is, what the heck is it? What is the infinite banking concept? And for me, it's a question that I've kind of grapple with a lot because it's a lot of things to a lot of people. And just at the end of that last episode, you were talking about how, it checks a lot of boxes, that there's the truth about money, that there's some revisionist history, that there's, the incorporating pieces of the Austrian business cycle theory. So how do you, when you think of the infinite banking concept, what first comes to mind when you think, what is it? What is the concept?
What is the infinite banking concept? In a nutshell, it is really learning how to actually become your own banker, seceding from the banking system that we have today. I mean, not that we don't, have to have a checking account and a savings account, but being dependent upon, third-party capital. I've heard you say that and write about that. Absolutely. Being dependent on the third-party lender. Mm-hmm. So, but when I say it's the truth about money, banking exists, and if you don't perform the banking function in your life, somebody else will. And we are almost conditioned as a people to abdicate our responsibility or not even recognize that we do have a responsibility.
Absolutely.
Right? And so the whole narrative in the financial world, the noise, and I mean, we're all surrounded by noise, no question. And some of the worst noise is in the financial world on purpose. And I'm not a conspiracy theorist, right? But I'm a student of history. Mm-hmm. Okay. You just keep your head down, you keep working, don't look up, pay your taxes, and
go to school, work hard, get a job.
Yeah, finance it all.
Right.
And never learn how the value of capital, the discipline, and the respect that it requires.
Put money in your tax qualified account.
Oh my gosh, spend your cash as soon as possible.
Retire poor.
Right. No, shoot, you're going to be in a lower tax bracket.
The taxes go down.
Yeah, sure. Eat beans and rice. Yep. Let's scrimp by. Let's scrimp by now.
Self-insure.
Scrimp by later. We're just not taught the value of money, our own money, mm-hmm. Right? And then if you have money, it requires discipline and respect, like I alluded to. But then you abdicate, even sometimes unknowingly, right? Mm-hmm. Abdicate your responsibility to fulfill the banking function. And if you don't, somebody else will.
Yeah.
And they're going to profit from it.
Absolutely.
Oh my God, and have control over you and your money. Mm-hmm. So, what is the infinite banking concept? It is a solution if you want to become your own banker.
Mm-hmm. And banking, I think that word holds up a lot of people. Like you said at the beginning there, that think of checking accounts or savings account.
Online banking?
Right. Yeah.
There's one fly in the room, he hasn't showed up all weekend. Have you seen those salt guns?
We could use one. But when we talk about...
We should get them to be a sponsor. I'm kidding.
But when we talk about banking, and it's not It's not checking
The
accounts
salt
and
got
savings
manufacturer
accounts.
should be a sponsor. I'm sorry.
Yeah. No, I got you.
Okay.
Not the banks. No banking sponsors.
Exactly.
They ever even listen to this, but yeah, the movement of money, right, is banking. It's the borrowing and repaying.
Deposits, withdrawals, loans, loan repayments, savings account, checking account. Nothing goes on in the big wide world unless there's an exchange of money.
Absolutely. 1/2 of every transaction.
Right?
Mm-hmm.
Banking, just the movement of money.
Yeah, and when I talk to friends or whoever, I don't care where you are.
You have friends?
1 or 2.
Okay.
We get together every now and then, holidays.
Can you name them? I'm kidding.
No.
Okay.
I don't care if you're in a restaurant, movie theater, public square, wherever you are. You can easily say, just look around the room, don't care how much money the people there make, don't care what they do, what industry they're in, whether they own their own business or they're working for somebody else. Most people don't have control of capital. And I mean, like most, like 99.99.
You mean the banker loaning you money down there, approving your loan at the bank? Including them?
Including them. They're just an employee working for the bank owner, whoever that is. And
you mean the lieutenants at the IMF?
Yeah, exactly.
Everybody?
People. Everybody.
Right.
All down the line, politicians. I don't care who, everybody. And you're exactly right. It's a preconditioned narrative. We're not taught to think about it at all. We don't bat an eye at borrowing to pay for the car, borrowing to pay for the house.
It's 0%, right?
Oh, yeah.
1 or 2%.
Free money, right?
Yeah.
Mm-hmm.
You get to deduct the interest on the mortgage anyway.
Exactly. You get a tax break. How, altruistic of the government to provide all of these incentives to become dependent upon third-party capital. And so when I start talking to people about the infinite banking concept, underneath banking, underneath the idea of banking is capital. And so I have written about it quite a bit. I think all economists get it wrong. Maybe there's a handful who don't. There's a few out there who talk about.
Can you name them? I'm kidding.
We agreed, no names.
We did. We agreed not to name names. Right.
Just about the ideas. But there's a few economists out there who understand that capital is a financial concept. It's a monetary concept. If you boil it down, I don't think this is a word, but it should be. It's just leverageable value. Okay? Financial value that can be borrowed against. Now, you can also liquidate capital, right? You can spend it.
You mentioned that the economists have it wrong, when it comes to capital.
Yeah.
Give us a breakdown of, the economist looks at capital as machinery, equipment,
Yeah, and it's super, the word capital is used for so many different things. It's very loosely used, and people, I've gotten the objection sometimes, you're being too particular, it's just a semantic thing, you know what they mean. It's like, let's go to your heart doctor and just let him, liver, heart, whatever, they're both organs, right? Who cares? Close enough, he's pointing to your chest, right?
I always say, excuse me.
Yeah.
That words have meaning.
Absolutely.
Words have power.
Yeah.
Right.
You have to be specific. The truth is in the word. Oh my gosh, the logos. Anyway, we could go all the way down that rabbit hole.
Absolutely.
So specificity counts, and capital is a particular thing. What it has come to be thought of as by economists is stuff. Machines, equipment, factories. People have all sorts of perverse uses for capital now. Human capital, right? Human capital management is the new term for human resources. Human capital sounds to me like slavery. But there's any kind of use for the word capital. But for the businessman, to to explain what the economist's role should be as far as explaining prices, explaining why things are the way they are in the material world, right? The reasons, the underlying foundations as to why transactions happen the way they do. If you want to get into that, which is what economics started as, it's what it should be, then capital has a very specific, narrow definition. And so for Austrian economics in particular, I think they get it wrong too. They've got what counts as Austrian capital theory today is a theory about the physical nature of stuff. The machinery, the equipment, the higher order production goods, right? Things that you don't consume right away, the stuff you use to make other stuff, right? That's capital, and even in modern Austrian capital theory. And that's based off of a footnote, a literal footnote in an 1871 book by Karl Menger. Karl Menger is the founder of the Austrian school. Mm-hmm. What almost nobody knows is that 17 years later, in 1888, he wrote a separate manuscript, 51 pages, still in German, not yet translated. Almost no one's read it. People don't even know it exists.
We had a conversation a couple of months ago, and I asked you the question, well, can't the Austrians gather up a few bucks and have it translated?
I think that still needs to happen. I mean, it's unbelievable. It blew me away that this was, the reason it blew me away is because he completely changes his mind. Karl Menger, in 1888, has a totally different view of what he alluded to in his footnote in 1871. I mean, that's a big
deal if you're Austrian.
If you're concerned about
a footnote
economics
or a whole paper that's yet to be translated.
Yeah. Over 150 years later. Yeah, it still drives me crazy. But there's unpublished private English translations floating out there. I may or may not have read one. Who knows who has the copyright and all that. But
but you're pretty sure he changed his mind, huh?
Absolutely. And I've talked to a couple professors who read German and English, write in English. And there are a few published academic papers out there where parts of the 1888 paper is translated. And Menger's quite clear. The whole point of all this, Menger is very clear that capital is a financial concept, and it's imbued with purpose. Like this financial value has a purpose. It's to acquire wealth, right? So capital is that financial value of whatever you own that you're going to use to acquire other stuff.
Money.
Yeah. And you know what is crazy? The word capital appears in Becoming Your Own Banker in one form or another 73 times. I counted.
Wow.
It's integral.
Was Nelson talking about equipment, buildings, people, human
Perfect
capital?
Question. And the answer is, of course not.
Of course not.
Yeah. So Nelson Nash.
Money.
Yeah. Nelson Nash in the year 2000, and he first had the idea back in like 1980. But in the book written in 2000, Nelson Nash has the proper understanding of capital that all but 5 economists in the world understand. I mean, that's for someone who comes from an Austrian economics background, an academic background, that's a big deal.
For someone who doesn't come from an Austrian economics background, when you were sharing with me this unpublished paper or untranslated, unpublished, I know who Karl Menger was. I heard one of the 100-year-old recording of Karl Menger.
Oh, really? Wow.
The University of Vienna, right?
Wow.
So I'm just like, wait a minute, the Austrians, somebody should have published that or translated it in the last 100 years. It is a big deal. I can only imagine how big of a deal it is for the Austrian economist. And on the outside looking in, I'm like, my God, man, go get it translated and published. Hello, what's the
Get
problem?
to it, right?
Yeah.
So that's
100 years, you're trying not to do it.
right. Yeah, and you mentioned it.
That's funny. I don't care who you are.
In the first episode, you mentioned that you're not a big fan of multi-level marketing, right?
Mm-hmm.
Yeah. So when a salesperson, graduated college degree in marketing, figured out that you can make money in finance, when they stumble upon infinite banking and then treat it like another sales concept.
Oh my gosh.
It's there's so much that's deeper to all of this that is not discussed, that's not known. The infinite, so what the infinite banking concept is to me, based on my understanding, where I come from intellectually and all of that, my history, is that it's just the best way to build capital. But you got to unpack the word capital. There's a lot there,
Especially if you're Austrian.
Yeah, as there should be. It's
no question.
And so you can go from there. There's all sorts of reasons why, but that's the foundation. And kind of expanding on that. Out there in the big financial world, we have this delusion, this myth. That, I don't know, it could be a lie, what is lie, inquire, intention, I don't know. But
lesson on us.
Yeah. It's convenient, put it that way.
Yes.
It's convenient that in the financial world and mainstream and everywhere, all financial advice nearly, that saving is supposed to be the same as investing.
Oh.
Right? If you save, well, obviously that means you're investing. Especially nowadays where...
And if you're investing, that means you're saving.
Right. They become interchangeable.
And they're... Right.
Yeah. Especially nowadays where even at your local cartelized commercial bank, you don't get paid any interest on your quote-unquote savings account. So it's... And we don't even really even realize that there's a distinction between saving and investing. And how convenient, the entire, and they're very upfront about this, the entire mainstream financial world is built upon a concept called assets under management. Your assets under their management, right? It's so upfront. Like the goal is to separate you from control of your money, right? It's under their management, not yours. And so there's the pervasive idea that, saving is investing. And in order to invest, you have to get rid of control of your money. Well, as far as capital is concerned, the last thing you want to do is give up control.
Well, listen, the guru 3,000 miles away knows better than you what to do with your money, and you need to pay him for his knowledge.
Oh, well, you're busy and you're not an expert, so you need to pay somebody who is.
Yeah, you don't know. Okay, I digress. But so banking, capital, what is capital? You're unpacking that, and then...
Yeah, and so it's not investing, right? And one thing that is out there in the world today is this idea that doing the infinite banking concept, right, which involves purchasing properly structured dividend-paying whole life insurance, right? Doing that, there's this idea out there that, this is the best way to invest.
Oh my gosh.
Whole life is the best investment. I'm saying that facetiously for anybody who's not hearing.
Life insurance is not an investment. Just, I don't know, the 5 minutes there that you've spent, literally we could spend about 3 hours on.
Absolutely.
Okay. So,
yeah.
And we will.
Yeah.
Because,
to be continued.
Yeah.
But seriously, there's, this is not investing, and we're not helping ourselves by alluding to the idea that it could be an investment. And we could in the future probably spend a whole episode on the history of whole life,
and we will.
But Congress tried to kill this idea of the favorable tax treatment of dividend-paying whole life insurance, and the cudgel they used to bludgeon the industry with was the idea that we're investing and that we're escaping taxes.
Rich people are taking advantage of a loophole.
Right.
And that was, in my opinion, we have the transcript. They're available online,
Yep.
the transcripts of the Senate hearing of what you're speaking about in 1988. That was a collusion from Wall Street, in my opinion, and the senators, right? And then the people who sold term insurance to attack life insurance because of the tax treatment of life insurance. Completely baseless, right?
Absolutely.
But they were successful in limiting what you can do with dividend-paying life insurance.
Yes. They got their foot in the door.
They got their, that's how they always start, right?
Yeah.
Get the foot in the door, we're going to tax the rich. Well, who's rich? If you make more than $1 million a year. Well, 10 years from now, you're rich if you make more than 50,000. You get your foot in the door and then it grows.
Absolutely.
I mean, all right. So,
so building capital.
There will be a podcast on that topic.
Absolutely.
All right.
But for now, building capital in a dividend-paying whole life insurance policy, which is what we're doing with the infinite banking concept, is not investing. That's not what we're doing. So it's, again, it goes back to that simple definition. The way I see it is that the infinite banking concept is the best way to build capital. And the reason that one of the contributing factors, sometimes I'll explain infinite banking to somebody. I'd say, give me an hour and, you'll get the essentials of it real quick.
Can I have your elevator pitch or speech, whatever,
Oh, yeah. Let me just bust that out. Let me give you my 30-second pitch about the history of, But, I'll tell people, we'll go through the main gists of infinite banking and, they'll say, well, is this legal? Like, why isn't everybody doing this? If it's so good, why isn't everybody doing this? Well, one of the reasons that so few people, there's plenty of people out there who are doing it, who have heard about it, but the reason, everybody and their mother isn't yet, is because of this problem, this failed understanding, this problem in our economic thinking about what differentiates investment and capital and why that matters. So if people want to just up front, investing, the purpose of investing is to generate income. Purpose of building capital is to build that pool of financial value that you'll use to acquire wealth in the future. And so, it's like, oh, you're just a life insurance salesman, right? You're selling life insurance. I have my, I'm not going to say names. So I've got my investment person, my money manager, who's the real expert, right? All you're doing is selling life insurance. I want to be out investing.
Oh, I get what you're doing.
All right. Yeah. So I think that, we've been taught that the best way to invest is to get rid of the control of your money as quick as possible, right? Get into that tax qualified plan. You can't get there fast enough.
Everybody else is doing it.
Right. So it must be right if everybody else is doing it. What if the best way to invest is to first build capital? The well-capitalized see investments, see opportunity in general, right? That could be investment opportunity, could be entrepreneurial opportunity. The well-capitalized see unique, even exclusive, highly profitable investments that the cash poor, the undercapitalized, the non-capitalized never see.
The uncapitalized.
Yeah. Anyway, so a little implication of that idea that the infinite banking concept is the best way to build capital, it's also the best way to lure attractive opportunity to you.
Yeah, listen, when you and excuse me, lure, that has connotations, to me. I grew up, capital attracts opportunity.
Yeah.
Right. Just naturally,
Mm-hmm.
period. It is. Right.
Yeah.
So I digress.
Well, and Nelson says in Becoming Your Own Banker, it's also in his second book, Building Your Warehouse of Wealth, that opportunity will come your way, opportunity will track you down. And then in his live seminars, and he gets real front and center. So opportunity will hunt you down.
That's right.
And it will. I mean, absolutely. How could it
not? The infinite banking concept, banking and capital, under that, the capital stock of a bank is money, right? You are not, banking is the movement of money, right? You're going to become your own banker, or the infinite banking concept. The capital stock of a bank is money. So, saving capital, building capital, you have to have capital or access to capital to perform banking, right? So, and I just want to say that the banking, the movement of money, your money must reside somewhere, right? When you consider the infinite banking concept, the dividend paying whole life insurance policies issued by mutual companies that pay dividends, okay, and preferably pay dividends even if there's an outstanding loan, a non-direct recognition company. It's a place to build capital, a place to put your money. So there is some learning. There's no question. We're going to talk about that. That's an underlying theme. You have to do some unlearning. That's part of learning, right? And everyone should take the opportunity to understand and learn about the infinite banking concept. There's no question. So putting your money somewhere so you can perform the banking function, capital, money is capital, right? From the Austrian side, they don't, you can help them. Okay. Infinite, look, since we're talking about words and words have power, look, the infinite is not finite, right? So, whatever the mind can conceive, it can achieve. Whenever you have capital, access to your capital, preferably, opportunities do appear. They do track you down. They do hunt you down. And then, of course, you are your best investment. We all know that. You have to invest in yourself and your God-given abilities and talents. Whenever you build capital, the opportunities to appear. It will help you, the individual, recognize what an opportunity is. It gives you the opportunity, the ability. You will learn if you don't have the ability to vet opportunities. That's very powerful. Concept is just an abstract idea, right? Yeah. And this is purely conceptual, right? Nelson talks about the concept, demonstrates the concept, applies the concept, has applied the concept for over 50 years, 60, over 60 years. It has a history, right? Just the infinite banking concept has a history. Life insurance has a long history, which there will be a podcast on that as well. Okay. And I talk a lot about, the capital stock of a bank is money. Well, since words have power and words have meaning, let's think about that for a minute. Okay. I'm from Fort Worth, Texas. All right. It snows down here maybe once or twice every 2 or 3 years. Right. And it lasts maybe 2 or 3 days. I married a beautiful girl from West Des Moines, Iowa. I married up. And, it snows up there sometimes unbelievably.
A little more often.
I don't know why they don't move. Okay, when it snows and that snow, mixed with a little wind or whatever, piles up against the barns and buildings. You know what they call that?
A snowbank?
Yep. You hear snow drifts. Yeah, it's a snowbank, right? Okay. If you and I were going to go down and give blood today, where would we go?
A blood bank.
A blood bank. Right? If we were floating down a river in a canoe, what's the pile of dirt on both sides of the river?
A riverbank.
You probably fish from one, haven't you?
Well, I've heard of people who have.
My God, son, I'm gonna have to take you fishing on a riverbank. Okay. So a bank can be an aggregate of any one thing. All right. So we're just talking about putting your money, your capital, your savings, right, into an entity that you own and control and piling it up. And when you have a pile of money, opportunity appears.
Yeah.
Right. And then concept, like I said, it's an abstract idea. Right. Well, if you have a pile of money in an entity that you own and control, then you are better equipped and prepared to control the banking function in your life. Right. So
well, that's pretty good. I think we're just about at the end of our time for this episode, but there you have it, the infinite banking concept, an unlimited abstract concept about how to build and use your money.
And where
to do it.
Where to put your money. Yep, that was fun. I can't wait till the next one. We'll get into more detail. I assure you, we're giving you the background, exposing ourselves and our personalities and, whether you participate in the infinite banking concept or not, God bless you. We just want to promote the idea or the knowledge that there is the opportunity for you to control your finances, maybe more so than you think.
Thanks for watching.
Thank you for listening. If you've enjoyed the content, leave us a like or a thumbs up, share us with your friends, give us some feedback, and we'll see you next time.